Hello and good afternoon, everyone. Welcome to our midday market update for Wednesday, February 15th of 2017. I hope you all had a wonderful Valentine's Day. This is George Papazov. I'm the owner, founder here, and head trader at Trade Pro Academy. I've been doing this since 2000 trading, and I've started this business since about 2012 to help individuals who are interested in trading to get an edge and to get the same kind of information and the same kind of strategies and access the same kind of community professional traders get that are profitable and successful. There's a big difference between retail and on the institutional side. And what Trade Pro Academy wants to do is take the institutional and bring that availability to the retail crowd and the retail trader. Because I believe anyone can trade as long as they have the right mentality and they're committed and dedicated enough. As a lot of our trade pros know, it's not as hard as you thought it was, but it's a lot, I said that wrong. It's easier than you ever thought it would be, but harder than you imagined. That's kind of how trading is. It takes a lot more work of the things you don't think you need to work on than the things you think you need. And this is the box that makes you successful. And we're working on that in our live trading community. And I know a lot of members will attest to that, putting a lot of work daily. It's a live trading forum. We post all of our trades, all of our analysis. I share my results, and everything's just open like a book. So I encourage you guys to join. 14-day free trial. If you go to tradeproacademy.com/free trial. Before we get started tonight's webinar, I want to share something with you that I'm excited about. Today is going to be our big oil webinar. I'm going to teach you everything you need to know on how to trade oil consistently for consistent daily profits. It's not going to be a strategy I give you and it makes you print you billions of dollars, but today you can see I did about $4,300 trading oil. I got some bigger size today than normal, but it was an inventory report. So I'll tell you what to watch for, when to watch for it, and how to trade this thing. That's my intention with the webinar tonight. So I hope you join. It's at 8 p.m. Eastern time. It's today. Replays will only be available to our Trade Pro subscribers. I'll put it in the member area. If you want to join, go to tradeproacademy.com/trade oil or click the link in the YouTube video right below in the description. Okay, and I'm going to make sure it pops up during this part of the video as well after I mix the video down. I'm very excited for this. I'll tell you the times you got to watch for when the professionals trade, how to catch them, what chart settings to use to uncover the opportunity, because when you're trading oil, the worst thing they could use is a time chart. If you're trading on a 1 minute, 5 minute, 10 minute, 15 minute time frame, you're likely not having as much success as you could be. Even if you're profitable, you could be making more. I'm going to show you one chart type that'll blow you out of the water and amaze you. Okay, that's enough on that. Join us tonight, 8 p.m. Eastern time. Very excited. And it should be about 60 minutes, but many of you that know me know that I take all questions and I work with you guys, so it might end up being more like 90 minutes. So budget 60 to 90 minutes for this webinar. But it won't be any longer than 90, because then that becomes a little too long. All right, let's talk about our midday market update today. What are we looking for and looking at? Well, S&P 500 continues higher. Since 2300, I've told just about everyone that's willing to listen to not fight this thing, to not short this thing on the way up and expect massive down moves. Because what's happening is everyone shorting below 2,300 is now getting stopped out. There's some stops coming out. Volume is finally starting to move bullish. I think we got an uptrend, and it's when will it ever stop? When will it ever end? I don't know. I have no clue. I don't know that. I can't tell you that. I can just tell you I'll trade it wherever it goes, and that's what the group is doing. We had some consolidation between these 75s to evens, the 2,300 even, and I said in the group here, remember these 74s a couple of weeks ago? How many times are we going to crack that level? 1, 2, 3, 4 before buyers finally say, okay, we got enough shorts stuck. Let's run them up. Same deal the previous week. 1, 2, 3 days. We had some tails. Bids picked up that level of support, and we took out some of the sell stops. We know that there's more buying. Okay, volatility today, surprisingly, it's trading at 11.7, so VIX is higher. Usually you do not see volatility come out of the gate as markets rally. Typically, volatility will decrease, but how much lower can volatility go? Let's remember that the long-run average of the VIX over a 20-year period is about 18 to 20, depending on the study and the parameters you put in. So we're way less volatile than one would expect in a traditional market. And traders are getting frustrated as heck trying to short this thing, trying to chase it. And now I'm starting to see sentiment from guys that haven't ever traded or that haven't done it, or shorts even that have been shorting this whole thing all the way down from the Trump campaign. Oh, Trump won. It's going to be a disaster. I'll short. All right, I'll short some more. I'll short some more. These guys that have been shorting, guess what? They're getting frustrated. What does a frustrated short do? Well, they buy to get out of their position. What does an angry short do? They start buying the market. You have to understand there's traders out there that are perpetually short. They just want to see the market collapse and make money on the downside. Why they don't buy and just make the money on the upside is beyond me, but they're looking to crush the market. And now they're saying, well, guess what? This market ain't going down anymore. So guess what? They're rolling over to buy this thing. So I think short sellers have not only covered on this rally above 2,300, I think you have some shorts that are now actually long. All right, that's the interesting part. So what does that mean? When everyone is long, when buyers have bought and shorts have covered and shorts have bought, where's the money going to come from to buy more? That's the question. That's what you got to watch out for. In the middle of the month, it's a typical time for assets to rotate higher. There's mid-month rebalance on the mutual fund side. They'll buy into equity. They'll buy the stronger asset and try to gain some of those profits towards the latter half of the month. So here's the first half. Here's the second half. They try to get more long equity with the trend to squeeze out more gains to end the month. All right. February, this is the second month of the quarter. Now we're in the middle of Q1. All right. What's going on here? Oil right at this 53. This is a massive level. Why? Because it's the middle point of a battle. Sellers win at or above 54. Buyers win at or below 52, and that's even moving at 52.5. Volume's starting to die out a little bit in oil, and I think we're going to sit here in this range a little bit longer. I don't think we're ready to break out. We tried to 54s. We couldn't do it. Above 54, buy dips to oil. You're going to 56, 57. Below 53s, sell rallies and try to catch the bottom of this range, and that's all you can really do on oil. Okay, the U.S. dollar was really strong this morning, and it just got clobbered. It got clobbered. As soon as it hit about 101.72, offer started to hit this thing, and we sold off. I think from what's happening here, from a down wave and a retracement, look, we have an up wave 1, up wave 2, up wave 3. After that, what you might see is an A, B, C correction. That's very likely. That might bring us down to these 97 to about 98s. Watch for that level. Watch for continued bearishness or downside on the U.S. dollar. It's Donald Trump's mission to make the dollar weaker. So it's just a few tweets away. So careful. This right here, this is an early sign of some reversal. Everywhere you see a candle wick like that, you could see, let me just turn that off. You can see prices press lower afterwards. You've been warned. If you're long the dollar, I've been trying to get long the dollar the last couple of weeks to catch this pop. I've missed it. This is a conversion or transitional moment for you to go into selling the dollar. Sell U.S. dollars, buy euro, buy GBP, buy the yen. Actually, stay away from the yen. The yen's more, if you believe the market's going to go down, the yen's not a bad pair to own. It's a risk-off asset. All right, gold rebounds off these 1220s. I'm still not convinced we're bullish on gold. I think we've hit the terminal point of the gold rally. I think seasonality is going to start to pull us lower as well. Be careful owning gold. I think above 1240, you're going to get some buy stops, but then your target should be 1260 tops, and we could rotate and roll over. Why do I say that? Well, you got to understand seasonality. If I go to seasonality here on gold futures, have a look. Seasonals remain strong to about the end of February, so we might get another pop and get these 1260s like I'm talking about. But then from early March onward, gold does nothing but collapse. Okay, so be very careful. We're approaching the end of seasonal strength. If you wanted to own gold, you should have done it in the last couple months. It's too late now to get excited about something that's already rallied so much. It's too late. Guess who else wants to get long up here? Everybody. When everyone's trying to get long, remember what that means. They become sellers. Everyone buys the thing. They have sell stops below. How easy is it to push the price lower, wipe out all the sell stops, and trigger a down move? All right. There's a lot of money that's piled into gold, as you could see here from this indicator. Commercial shorts are starting to expand. I won't go too much into this. It's more of a subscriber-based chart that we use on Sundays. All right. So gold, it's picked up some bids off these 1220s. Like we said yesterday, I'm still cautious. I'm not as optimistic on gold as I was literally a week and a half ago. All right. But we got in at 17 and sold 32. So it's back at the level I stopped out at. So I really just sat through all this without having a position, which is great. Bonds have weakened a lot. I think bonds are one of those things you look at and you say, hey, at this 150 level on the T-bond futures, the 30 years, or the ZB futures contract, at these 150s, it might make sense to give it a shot. Right now it's trading 150.02. Might make sense to give it a shot with 150 stop loss or 149.31. Okay, because remember, they trade on 32s. Once you hit 32, it rounds up to the next point. So this is a low risk opportunity to give it a shot. And I think the equity market, I'm going to go out and say this, I think the high is in. All right. I think the high right now of 2344.4, I think that's the high for this week. And I'll probably dare to say that's the high for February. All right. I think the high is in. I think the buying has happened. But be cautious. Just because I say that doesn't mean you should be short. As I say that, I'm long at the moment from below 37.5 on the futures. This is the guy that bought down here telling you that he thinks the high is it. All right. What else can I show you? I wanted to show you equity futures. There's S&P 500 plowing ahead. You could see Dow has had the most pronounced rally. Russell broke to new highs, but is having a hard time finding more opportunity, more fuel to go higher. NASDAQ is charging ahead. I think we've gotten to a point that if you're not long, you wouldn't buy here. Answer this question right now. If you're long at the moment, would you sell here? Yeah, you'd probably sell to take some profit. Okay, great. If you hadn't bought, would you buy up here? Would you be buying? Yes or no? And if the answer is yes, then buy it. But if the answer is no, then step aside. Because if you're long from below, you're taking profit up here. If you're long down here, you're selling up here to take profit. If you're taking profit, others are as well. You're starting to become the early waves of sell pressure, which could hold the trend at least sideways. All right. When I get in, I like to be right away. I don't like to sit there and wait for rotations. I'm a little impatient with the market. That's how you should be. Because the more patient you are, this is one of the most widely misunderstood concepts. You look at this, if you bought down here and somebody will say, well, great, I'm break even, I'm not losing money. It's not great. This time that you sat in this trade represents risk. You took the risk of a massive move against you and you haven't got paid. So your reward is 0 to a percentage of risk. You took risk with no reward. That's a negative expectation in the long run. So you have to realize that's why timing is important in this market. All right. If you got good timing, you don't have to be too nervous about whether or not you're going to win. In the long run, you will. Some stocks making new highs. Goldman Sachs off to a fresh high. When I said this morning, somebody said, what are you talking about? It was off the fresh high after 210. I said, you need to look at a weekly chart. You haven't traded long enough. And then if you scroll out long enough, guess where the high was? In 2009, Goldman Sachs was trading at 234. Nah, it was higher than that. 1 second. 250.70. 250.70 was an all-time high. Goldman Sachs presses to a new high. On this last wave higher in the last 4-day rally, volume has dropped. I think that the upside has capitulated. I think too many people are on board the ship. On one side, the ship is starting to do this. It's starting to tilt. The water levels here. Some of them are going to slide off. And if enough water goes in, this ship could flip and go down for a bit of a drop. I can tell you this. Executives were selling options. Insiders were doing a lot of transactions. Were getting rid of their shares around 230 to 240. This was a distribution area. This breakout represents an attempt to try to get retail traders long. Why? We need to build demand in order for a lot of money to sell. If I want to sell 200,000 shares of Goldman Sachs, I need to have demand. I need someone to sell it to. I think this breakout is generating some capitulation, last-minute demand, so I could offload my positions onto those people. Keep an eye out on those insider transactions. I guarantee you they're selling. They're selling 230 to 240. On this rally, there isn't that much volume, which means the small guys are in there buying, but the big guys are keeping their money in their pocket and they're selling it to them. That's why volume's low. All right? Every trader knows this, and I said this yesterday. It's very easy to accumulate a massive long position, and it's very hard to get out of it. When you're buying, you can always buy dips. There's always opportunities to buy dips. When you're long a massive amount of shares and nobody wants to buy it, when the bids get pulled out, when the rug from the floor gets pulled out underneath you, it's a free fall. That's why it drops so quick, because nobody wants to buy the darn thing and you're trying to sell it. So you're accepting a lower price. Okay, I'll take a lower price. I'm desperate. I need to get out, lower price. And then you're finally going to find out where people want to buy. But at that point, you're doing it at a massive loss. So that's what I'm saying. It's easy to accumulate a long position. It's hard to get out of one. You're going to turn on the financial media. They'll tell you to buy everything in sight. Why? They need someone to sell it to. I can tell you this much. No CNBC, no other Jim Cramer, nothing will tell you this like I'm about to tell you. There's very low volume. All right? Take it how you will. If there's low volume, ask yourself, who the you-know-what is buying this? All right? It ain't the big guys. All right. They're already long. They're selling it to you. That's Goldman Sachs. The banking sector as a whole is pushing higher. Bank of America, there it is. Wells Fargo off to some highs as well, just short of that 59. We just did Goldman Sachs, Morgan Stanley, higher. So the banking sector is just exploding. XLF, here's your financials. They continue to move higher. Okay, there's going to be a reversal at some point. I'm starting to see some signs of it happening now. If we go under this indicator that we've been looking at last couple of days, percentage of stocks above their 50-day moving average continue to climb, but are holding steadily above 70, climbed above it and holding above 70. I think the next move up goes to 80. We could have one more move, one more drastic move higher, and then followed by a big drop. That's usually how it goes. It'll rally, and then it'll evaporate very quickly. And whoever buys that high, pour them. All right. Percentage of stocks above the 100-day moving average continue to forge forward. 75s and above. I think above around 80 and above that becomes some clear overbought and distress signals. I think the interesting thing that you want to take away from today's session is that volatility is climbing higher. Hi, Leo's telling me to move my eyes. When you're in front of the computer all day, you need to save your eyes. It's a great program. All right. When volatility is 11.8 and has made a pop as the market goes up, that's your first warning sign. A warning shot has been fired. Any questions or comments? Showed you the financials. I showed you equities. I showed you gold seasonality. I don't know what else I could show you. I'm going to show you currencies. You can see the dollar is starting to, so the purple line here is the dollar versus 6 other pairs. See the dollar starting to find support. It tried to go up. Now it's going back down. I get the sense that the dollar is going to go down, but I also get the sense other currencies are going to move down with it. So be careful. I think one currency that's about to take a bit more of a tumble is the euro. It's been tumbling a lot. I get it. This is a daily chart. All right. One that's really ripe for a tumble, I think, is the Aussie dollar. So if we go in here and have a look at that currency, I'll show you where it is. I got to go in here. Aussie USD. Sorry, Jordan, but it's the truth. All right. It's been going up a lot on the daily. That's actually a weekly chart. You can see there's a lot of sell side and supply overhead that's moved in above these 77s. And we're there right now. We're knocking on that door as fuel or volume has kind of decreased and momentum hasn't been able to get as excited. So I like the fact we're above some moving averages below. I like the fact Bollinger Bands are starting to open up a bit. We're at the top band, but I think we get a bit of a pullback. So for a shorter term play, I'd say short Aussie. Not right now, obviously, not in the face of this. Let it see what it could do above 77. And then when you get a topping pattern that looks something more like this, okay, try to get short on a slightly lower high. It's a great opportunity trade. But the Aussie dollar is strong for numerous reasons. I won't go into it. I think it's time to fade this thing, okay? If you have any questions, let me know. I want to remind you one last time, this is literally your last call. Oil webinar today at 8 p.m. Sign up, tradeproacademy.com/trade oil. I can't believe I'm writing with my mouse. I have a pen right here. Trade oil. Oh, the pen doesn't work. Good. That's why I'm writing with my mouse. Go figure. Anyways, tradeproacademy.com/trade oil. Join, sign up. 8 p.m. tonight. It's going to be live. You have an opportunity to ask questions. I'm literally going to show you my statements for all year trading oil, how I've done it, what I've done. And like I said, guys, for those of you that know me, you know I'm open book. You know I hide nothing. I got nothing to hide because I literally do this. This is my career. This is my profession. This is all that I'm actually good at trading-wise. And I'll show you the results. I don't care. I'll show you what I've done. That's good. You need to know what the guy teaching you has done for themselves. It's very important. All right? And I rely on trading income to actually pay for my bills. So I'll show you how I do it, how I trade on a consistent basis. Not every day is phenomenal, but today sure is, and most of that's from oil. And I'll show you that strategy. What I look for when I get in, when you should trade, when not to trade, when a trend's going up and you should fade, when you should stay away and just buy the darn thing. All right, when to sell, when to buy a dip, those kind of things is what I'm going to go through. It's going to be about 60 to 90 minutes. Sign up today. It's free. TradeProAcademy.com/trade oil. I'll see you there tonight. Replays will not be available, so make sure you catch it live. Limited seating. I know when people say that, it's often just to try to get you to sign up, but I'll tell you there is limited seating on my go-to webinar platform. If we hit that, then what could I do? All right, sign up, show up. Replays available to subscribers. You're going to learn a lot of good info. Have a great afternoon, guys. trade careful out there. Remember, the market's strong as heck, but it's starting to show a little bit of capitulation on the upside. And I haven't said that yet, and I'm going out right now. On Wednesday, February the 15th at 12:23 p.m., George Papazov from Trapper Academy is calling it. We're going to get some downside. The next 2 to 3 days are going to be downside. This Friday, we got options expiry. It's going to put some sell pressure on these markets. So be careful. All right. All the best. Take care. Have a good afternoon, YouTube. I'll see you tonight at 8 p.m. For the Trade Pro subscribers. Hang tight. I want to show you some trades and what we're looking at. Will it be recorded, Steve? Yes, it will be for you. For anyone who's a Trade Pro subscriber. Let me answer this question outside the webinar, actually. Take care, guys. Have a great day, YouTube. I hope you enjoy this broadcast. I'll see you at 8 p.m.